Let's get to today's market stories. We just talked about shares in Spotify jumping in the pre-market. However, Coke reported a miss, and we are keeping an eye on Air Canada. Now, that company suspending flights to Cuba because of that aviation fuel crisis in the island nation. We're joined by Grant White, Portfolio Manager and Wealth Advisor at Endeavour. Grant, great to see you. Thanks very much indeed for joining us.
Andy, always my pleasure. Thanks for having me.
What is catching your eye this morning in the markets?
You know, that Spotify report you were just mentioning really stood out to me. I mean, I definitely saw a nice surprise to the upside from that one. And so I'm pretty excited about it. Spotify is a company I've liked for many, many years. At times, it's been challenging to buy. We've been shareholders off and on over the years. But, you know, really nice report. And actually, the best thing about this report is not the top line. It's really the bottom line that I love about this, because it's showing that management has really got a handle for their company and really understanding their operating costs going forward. And I think that's going to be really important going forward, especially in the content space like Spotify is in, because there's, as we know, I mean, there's lots of challengers out there. I mean, Netflix now has podcasting and so on. So, you know, it's a challenging space, but Spotify is proving time and again that they can, one, add more users, and two, they can manage the bottom line very well. And we're seeing that. I think they hit a 33% margin based on the recent report, which is just a fantastic number. And they're being rewarded for it today.
Let's put up maybe a 5 or a 10-year chart for Spotify. You wouldn't be buying more, though, right now? It's a hold as far as you're concerned?
You know what? We were looking at it pretty hard this morning. I might be leaning towards more of a buy. Yesterday, I was a hold, to be quite honest. But, you know, looking at this report, it's starting to change my mind a little bit on this. So we're going to take a closer look at it. But, yeah, I mean, I do love the story. It's a matter of pricing more than anything. And if we think that it's a good pricing opportunity at this point. One thing I did, like, as I said earlier, I really like how the company is managing that bottom line. And so I think that's what's really giving us poised to take a second look at it right now. But we might be shifting it to a buy very soon. I
don't want to get bogged down too much here on the Swedes, but it's way off its high. Why is that, Grant?
You know, I think that's a lot to do with the challenging space. I also think it was overvalued before. I mean, it is a great company in my mind, but I think that, you know, prices just got ahead of it. And so it was due for that big pullback. Competition is heavy. As I mentioned, Netflix is in the game, you know, and many, many others, whether it's Apple, Google, you name it. So lots of competition out there. I do think that they have a genuinely good moat, that it's a great experience with Spotify. I mean, I'm a Spotify user myself, as many of the viewers are, I'm sure. And it's really just an outstanding experience. And so there's a lot to like about it, but also content is king, and they own some of the best podcasting properties out there. So all this to be said is I think that it's a great company, but you just got to be careful in pricing, because we are going to see fluctuations like you were pointing out.
What about Air Canada? Maybe we'll put up a 1-month chart for Air Canada. Cuba's a chunk of its business, but of course it's so diversified. But fascinating. I mean, lots of Canadians over the years have been to Cuba on vacations. Something like a humanitarian crisis on that island now.
Yeah, it's. I mean, that aside, it's certainly a very challenging time for Cuba. But with Air Canada, I mean, I think this is kind of the one of the latest things that, you know, one of the reasons I don't love investing in airlines is because you have all of these issues that can come up, and this is just the latest in a long line of things that can happen to an airline company that can, you know, throw a wrench in their plans. And so, I mean, you're right. This is a very diversified company. They're going to be fine through all this. The you know, suspending flights to Cuba is not the end of the world, but it does point out the challenges that airline companies can face, whether it's fuel costs or just general operating costs, labor, you name it. And so, you know, we've got Air Canada as a hold right now. I think as you're looking at airlines, Air Canada is a great airline. I think that, you know, they've shown time and time again that management again has a really good handle on this business and the industry. They can do really, really well, but it's always a challenging space, and there's always factors and curveballs that come out of nowhere. You know, as it seems. So for those reasons, I've got it if you're an owner of it today, I've got it as a hold, and I would keep it there. You know, I don't love the current space for it right now, what's going on, but you know, if you do like airlines, I think Air Canada is a good airline too.
And Coca-Cola, maybe you could put up even a 20-year chart for Coca-Cola. It's been around so long.
The longer, the better. You know?
Yeah, investors weren't thrilled by the latest tidings from the company.
Yeah, I mean, Coke's an amazing business, and as we all know that. I mean, I think you can be really happy owning Coke for a long, long time, and they're going to do pretty well. I think from a short-term perspective, if we want to look at that, it is, going through, again, some challenging times, but these are these ebbs and flows that you're going to see with a great company like Coke. You don't go into this company thinking I'm going to own it for the next 6 months, though. I mean, I think if you're buying this company today, it's because, one, they've got a great free cash flow. Again, time and time again, this company is just going to chug along. They've got great product development. I mean, I'd love to see how things shake out with some of their newer products over the next year.
Mm-hmm.
I think there is some growth challenges. I mean, it's something that we'd be looking at more closely to say, yeah, I'd like this to be a buy. But I think, frankly, Coca-Cola is a great company. You can own it for 20 plus years going forward, and I think you're going to do very, very well on it. But for right now, I think I'd have it as a hold. We wouldn't be adding to this position today, and it's largely just because I think the short-term growth environment's challenging. Emerging markets is going to be a key factor for them, and I'd love to see how they're going to continue to grow there and hopefully beat out their peers.
What are clients saying to you about AI, especially the ones who've been in these formerly high-growth software stocks, things like ServiceNow or Salesforce or Adobe? Are clients in those, and are they disappointed?
I think this is a really challenging time for the SaaS companies. But to be clear, I don't think software is going away by any stretch. I mean, I think the rumors of its death is vastly overstated. I think that the challenge is going to be what software companies are going to do well in this environment, because I think that margins are going to be vastly compressed as we're seeing now. And I mean, and when you look at whether a company was trading at 30 times free cash flow or 37 times free cash flow, I think that number could come down to 17 times free cash flow going forward. And so with that in mind, I think there's a repricing. But I also think there's going to be really big winners in this. And I think a company like Salesforce can do very, very well if they adapt well. And there's others. And, we're seeing it in some of the companies like, Databricks and companies like that are adapting extremely well and are going to be open to plugging into other things. So as it relates to AI, I actually think this is a really interesting time because, we're actually, the proof is going to be in the pudding now versus a lot of the speculation. I think we're going to need to see AI actually start to prove out the thesis more and more. And the software companies that adapt well to that, I think are going to do very, very well. That being said, I think that there's a lot of companies that aren't going to do well in that. And so picking the winners in that is going to be challenging. So I'd stick to quality. I do think Salesforce is going to do well in it, though.
And just finally, one stock we're tight for time, but one stock you like the look of right now is Fairfax Financial. Just give us your reasoning on that, please.
Yeah, I mean, I think that's a state of where we are in the markets as well. I'm going to more quality, and there doesn't get too much higher quality than Fairfax in my mind. Great business, great management, great free cash flow, consistency there. So, we've got Fairfax as a buy, and I think that where we are in the market, if you want a really great core holding that's going to do very well for you over the next year or two, then Fairfax is a really good fit. And again, you're getting at a pretty good pricing right now. And so, I'm excited for their earnings report later this month. I think it's going to look good. But yeah, I think Fairfax is one that you can feel very confident in owning, and especially when we're likely to see more volatility this year, in my mind.
Grant, thank you very much. Grant White of Endeavour Wealth Management.